This is Professor Minton. So today what we want to do is we want to wrap up exhibit number 1, and of course we're going to have to do some manipulation actually of exhibit 2 as well, to get the numbers that we're looking for. And so first of all, I want to just point you again to the balance sheet. Now this is the balance sheet, and it has all of the entries in it up through the first payment of the mortgage, the Friendly City mortgage or whatever it was called. And let's just take a look down here and see which one that was. Yeah, I'm sorry, current Tifton Federal mortgage. That's the one that we actually, I believe, made an adjustment to. And so once you've done all of that, you should have net income of $13,690. One of the things that I noticed is that some people handle the accounts receivable incorrectly. And in some cases, what they did was they treated the $575 of accounts payable that was on the books initially as accounts receivable instead of accounts payable. And of course that would not be correct. This accounts payable number has that beginning number of 575, but then we paid it, so it's completely off the books. This is a new number that's whatever it calculates to at this point. So this should be the correct number, unless I made a mistake, which is always possible, but I think I've tried to go through it fairly systematically, so I shouldn't have any mistakes. When you go back to your beginning balance, if your beginning balance isn't right with that 824,125, it's because there's an error. And I looked at a couple, and most of those errors were with the with not putting the $4,000 each for the beginning opening accounts receivable, or they treated as the accounts payable the 575, which was the 375 for Georgia Power, the 125 for Tifton Fossils, and the 75 for Public Service, Tifton Public Service. They treated those as accounts receivable. Now, they put them on the correct side. In other words, they put them as credits, but they reduced the accounts receivable, and those are not interchangeable. I mean, you can't just interchange an accounts receivable and accounts payable. One you owe somebody, and the other one they owe you. And the only time you're crediting accounts receivable is when you receive the money. If you receive the money, or you write them off, if you write that account off, you would credit it, but otherwise you don't. So, and I mean, this takes you back to accounting 2101 or accounting 101 that that deals with making basic entries for accounts payable. That's generally about, I don't know, chapter 2, something like that. So if you need help with that, go back and review in your 2101 book or your 101 book. Go back and review that, and you should be able to figure that part of it out. Okay, so here's where we are currently, and let me pop back over to the Media Moguls exhibit. Now I did this one right here. Okay, so I'm going to go ahead and highlight that, and that takes you up through everything we've done so far, and that includes, of course, the first transaction. That includes your first transaction. All right. So next, on the 31st of March, we paid the first payment of the new maintenance truck to Joey Johnson Motors. Use the amortization schedule you created to make the entry. Well, I'm going to create that amortization schedule, because if I don't, I won't know what it is. Okay, so here's the amortization schedule that is in Exhibit 2. Now we did the buildings, And here we did the new truck. And the new truck, so I guess I already did do that one. I thought I hadn't done that one yet. The payment of interest on the first month, and this is March, right? We're in March. So the interest payment was $300, and the principal payment was $576.51. This is the total payment. How did I get it? Equal PMT, open parentheses, then your interest rate for the month. So if you put in the annual interest rate, which is what's provided at 6%, you would divide that with a front slash by 12, then 80,84 for the number of months it's going to be done over, and 60,000, which is the present value of the loan. Okay, and that's what you come up with. And remember that you're only reducing your principal balance. In other words, this beginning balance here, and it goes to 59,423. Well, that's only this number minus this number. You cannot include the interest payment, because if you do, you'll be wrong. And when you do these, you always go down to the very bottom after you put it all together and make sure that you're coming up after 60 months with 0, 0. And, you know, that's true over here. If I look at this one, this was 240 months because it was a building, and I came down on the 240th month, and it says 245 over here, but that's because we start at like 5 or something. 6, I'm sorry. So this is row 6 that we started in. So when you subtract, you're going to come up with 240 total payments, and you'll come to 0, 0. And that's because the last payment is virtually all principal and very little interest. And you notice that just looking down through here, you see that the interest payment is dropping every month, and the principal payment is rising every month. And that should be the way that you see everything on these amortization schedules that you create on your own for your land and so forth. Okay. So let's go over now, let's go back to Media Moguls. And I'm going to go to New. And we're going to do this one again as a journal entry. And I have to make sure that now this is, it just happens to be the 29th of March, so I don't have very far to go. But in our world here, we're making it the 31st. Okay? And that's because that's what it is on Exhibit 1. So interest expense, and just start typing, because you already added that expense. Make sure that it's showing over here. Notice here's the interest expense. Here to the right, you see the word expense. If it doesn't say expense, then you've got something incorrect. The debit, 300. Now we have the note payable current. The note payable current for Johnson Motors, okay? And so I'm going to start, and I'm going to type in NP, maybe. NP, and now I have all of these, and here it is, note payable current, Joey Johnson, other current liabilities, and that's what that should show up as, because these notes payable here represent the amount of money that's going to be paid over the next 12 months, and it's therefore current versus a long term. And it's, let's see here, 576 something. 576.51. So type that in. And now notice that I haven't put anything over here, but it's of course paid in cash. How do you pay your loans off? Well, you pay them in cash. 876.51. Now you want to make sure that that's correct. This is your payment amount. So you come back over to your Exhibit 2, 876.51. So we know that we're correct. If we did the payment number right, shouldn't have any problem. And back over to Media Moguls. And you have to record the entry by save and new. In this case, we're saving and doing it saving and new because we're going to create other journal entries right behind it. on the same date. Highlight this group to let everybody know, or let yourself know basically, that you have actually done this entry. Now on March 31st we paid the other vehicle payment to B&G Bank, and so we have an amortization schedule for B&G Bank. And if I pop back over here to the Exhibit 2, here's your existing vehicles. I know what the beginning balance is, but I have to go back to Exhibit 1 so that I can see what the interest rate is. And so if I come all the way back up at the top, it gives me this significant information to consider. The owner brought into the business several vehicles with the original cost of $90,000. They were purchased on January 2nd, financed over 60 months. As of the date they were transferred in March, $32,527.25 had been paid, leaving the balance of $57,462.75. So it's not 90, that was the original amount. There, 75, I'm sorry. 462.75. So now what we're going to have to do, and the way that this works, is this is the balance, but this balance would be what you would have actually down here, because we started out with 90,000, right? And that was what the payment was based on. So it would be down here all the way in March of 25. This is what the beginning balance should be. Now, it could be off if there are a few cents off or whatever. So we have to calculate the original payment, and that's why I had the 90,000 up here. At 90,000, and we're going to see if I can't make all of these with comma delimiters here. So let's calculate the payment due over 60 months. Let me make sure that's correct. 60 months, B&G, and now this one's interesting because the remaining balance, 12% over 34 months, was still owed on the vehicles. And so I think we can probably calculate it either way. But what we need to do here is start with the 12% that they're giving us here and 60 months at 90,000. So let's make our payment equal PMT for payment. Open parentheses. It's 12%, so that's 1% per month. So I'm just going to shortcut the process. I could put 0.12 divided by 12 and get the same thing, but since 12 months is 12%, you could say it's 1% per month. Comma. How many months? The number of periods is 60. Comma. And the present value at the inception of the loan was 90,000. So, whoops, I'm in the wrong spot here. Let me try that again. And I'm going to multiply that times -1. And the reason I want to do that is because I want this number, even though it's showing up here as in red, which we typically show for a negative number, And it is really a negative amount that's coming out. This is your payment, okay? But I'm going to treat it here as a positive. I treat it as a positive so that it's easier to deal with on this amortization schedule as a positive versus a negative. Now the interest is going to be equal to this number right here times 0.01. This is your beginning balance, or $900. The principal is simply the difference between the interest and the payment. So I'm going to equal points of the payment, F for it, because if you F for it, what it does is it makes it an absolute reference. And you don't want this one to change, because otherwise you'll have errors going down. Minus $900 in interest, close parentheses. And I must not have put an opening something in there. Anyway, it came out correct anyway, because it automatically corrected it. And then lastly, we'll have equal to 90,000 minus your principal balance. And this number here is now your ending balance, but it also becomes your beginning balance. So you're just going to go equal and point to your ending balance like that. And then I'm going to come down and bring each one of these down. Like that. And then I can grab this whole group and bring it down through the entire range. I'm going to stop right here and see if that isn't correct, what I have right here. And it is. So what I did for you is I went ahead and started out, this is what your beginning balance would be at the start of March the 1st, 2025. But I had to do the others up here so that I could get to the amount of payment. Otherwise, I don't know what the payment is, and I can't calculate the interest and so forth. So we're good to go. And if we did it right, we'll come down here to the very bottom at the end of 60 months. And we should come to zero. And in fact, we do come to zero. So that means the loan is paid off at that point. Now, when I did this and put it together for you, on the balance sheet, what you would have had, you would have had the principal, so I'm just going to do equal sum, so that you can see how all of this fits together. Here's March the 25th. And it's going to run through February of 26. Close parentheses, 18,102.66 should be the amount of principal that you have on your balance sheet. Okay, so now we want to actually make the entry. So $900 and 1102 is what I'm looking for. So I'm going to do it the same way I did the last one, interest expense. $900, notes payable. And I don't know why it's not picking up that first N when I put it in here. NP, current, B&G Bank, that's where these other vehicles are paid to, right? That's where they're financed. So I have to put in 1102 here. And when I come down to the next line, I'm just clicking, come down to the next line, then I have cash. Same thing you did before. Cash. And when I click out of there, and whoops, didn't take. Sometimes it doesn't take. This thing glitches a little bit. And over here, of course, we want the amount of the payment, right? So that's 2002. And that's the correct amount. And again, we would go back, we would check it to make sure that that's what we're showing over here. 2002 is the payment. So we've clearly done this entry right. Interest expense of 900. And how do we know? Well, we did a lot of stuff. We made sure that it came to zero after the 60 months. We made sure that the interest rate was correct based upon what the other information provided told us. So we've got all of the elements, so it must be correct. Okay, back over here to Exhibit 1. And we're going to highlight that. On March the 31st, paid for the land payment, Friendly City Land Management. See the amortization schedule. And so we go to the land, and before I go over there, I'm just going to see what I was charged for interest on the land payment. The Mr. Mogul purchased the land on February 28th of 2025, which means that basically at February 28th, that was the last day of February. So March the 1st, it's like it was bought on March the 1st. You understand? It's just going to roll over to the same number. Okay, Friendly City Land Management. The cost of the land was $250,000. Mr. Mogul put $50,000 down and financed the remaining $200,000 over 120 months at 6% per annum. The asset, land, and mortgage liability were transferred to the company. Okay, so let's talk about what we have here. We bought some land, that is, Mr. Mogul bought some land for $250,000. That's the asset value. He put $50,000 down. The $50,000 from the $250,000 result in an amount to be financed of $200,000 and is being financed over 120 months at 6% per annum. Okay, so back over here to our Media Moguls exhibit, and here's your land. The first thing we have to do is we have to get a payment amount. So it's equal to PMT for payment. Open parentheses. The rate in this case is 0.005. And if you're not good with making, dividing 6% by 12, you can always just take 0.06 front slash 12, and you're going to get the same thing. I just happen to know that if it's 1% for 12% per month, then it's half that, or 0.005 for 1 month. Okay, and the number of months that they tell us is 120. Comma, and the present value of the land is $200,000, which is showing up over there as the beginning balance. I'm going to multiply that times -1 to get it to a positive number. Even though it's, again, showing up as red in red, which is typically an indication that something has happened on the negative side of cash. And it is happening on the negative side, but for our purposes here for creating the amortization schedule, it's just easier to work with these positive numbers. Okay? All right, the interest payment equal to the beginning balance times 0.005. And again, you could put 0.06 and 0.06 divided by 12, you get the same thing. And this should be clear to you that it's $1,000, because if it were 12%, 1% would be 200,000. This is half. 1,000 is half of 2,000, right? Okay, the principal is going to be equal to the payment, and that has to be F4, because you want to make it an absolute value so it doesn't change. It always goes to this payment number, and minus then the interest, and equal, or enter, should say. Your ending balance now is going to be equal to the 200,000 beginning balance minus the principal that you paid for that month. And that number then, the ending balance, becomes your beginning balance. So it's equal to the ending balance. Notice I didn't put the number in, I'm just pointing to the cell. If I put that number in, it's not going to change the number going forward, so you have to put it in as a cell reference. And then I'm just going to drag these down individually. I could drag them down all at once, but I'll just point to each cell and drag it down. And now, since I know that this has a calculation, as does this, and this has a calculation, I can grab this entire group and bring it down 120 months. So November 34. What went wrong? Did I have enough? I might not have added that to see whether or not I had 120 months. Here we go. I didn't have it all the way down through 120. I only had it down through, what, 117? And notice the same thing here. It's on row 125. We started row 6, so we're good. And there's your 0, 0, meaning that that is the payment, the final payment of the loan, and the land now belongs to you without any encumbrances. Okay. So 1,000, 12, 20, 41 is the entry. Interest expense. So these are all done exactly the same. The only thing that changes is the numbers, because we have different loans and different loan values and so forth. NP. And here we are looking at the Brindley City land management. You got to make sure that it's showing up as current. Make sure you pick the current, not the long term. And this one was, again, I have to look, I'm not as young as I used to be, 12, 20, 41. And the last one, of course, is going to be cash. Grab cash, 12, 20, 41, that's the amount of your payment. Again, we've broken this up into the interest expense and the principal reduction of the loan. Save it now. Back over to Exhibit 1. Go back to that particular item. Highlight it so you know that you've done it. On March the 31st, we record depreciation for the other vehicles, $90,000 cost, 34 months remaining useful life, salvage value of $12,000. Now, even though we're showing a $90,000 cash and 34 months remaining useful life, that doesn't tell us what the amount of depreciation is. What we need is this $90,000 and the salvage value of $12,000. Okay, we know that it's a 5-year loan or 5-year vehicle. That's the amount of time it's going to take for us to amortize or depreciate that entire vehicle stream. So let's go back over here to our Media Moguls, and I think I created a depreciation side for it. Okay. No, I didn't, because I changed that. I changed it around from last time to this time. So starting with 90,000, we have a salvage value of 12. The useful months, 60. So I made a lot of changes from one period to the other. And that gives us a depreciation of 30. Okay, so how did I do that? Well, the calculation for straight line depreciation is the original cost minus the salvage value over the useful life in years is the way that it's normally stated in the formula, but because we have to do this every month, we changed the 5 years to 60 months, so 5 times 12 is 60. So 90 minus 12, and that does actually give you, get you back closer to what that original number was. Anyway, 90,000 minus 12,000 over 60. Now you got to make sure that if you're doing this as a calculation, oh heck, we'll just do it. Notice what I'm going to do first is I'm going to put this first group in the numerator in parentheses, because I want to make sure, because ordinarily in Excel it works just like anything else. You do multiplication, division, addition, subtraction, and that's the order. And so in this case, if I don't put it in, since I'm subtracting something here, if I don't put this in parentheses in the numerator, it will change the order of calculation and it won't calculate correctly. So 90,000 minus 12,000, and again, I'm not making a number. All I'm doing is just pointing to cells. So open parentheses, B3, in this case, B3 minus C3 divided by D3. Okay, again, I'm just pointing to the number up here. And why that's important is because if I changed, and you can change depreciation as you go, because if I had said, instead of that there's 34 months, that 34 months, what it told you was that it was still on the standard depreciation schedule of 5 years. If I said, oh no, those are good for another 3.5 years or whatever, then I would have to change these numbers. But in other words, I would have to change this useful life, or I might have to change the cost. But I don't have to change the formula. All I have to do is make whatever changes I need up here in the cost and salvage. If the salvage, for instance, if I said, well, the salvage is actually 18,000. So if I come up here and put in 18,000, then you notice that the depreciation changes here. I don't have to do anything else. I'm going to change it back though. Okay, so the depreciation expense on the other vehicles is $1,300. So let's go back over to make a journal entry here. We're looking for depreciation expense. Now it's probably built in. I have accumulated depreciation. I don't have depreciation expense for the vehicles. Now, do I want to keep that depreciation separate? Yes, I do. I want to keep the depreciation for every asset class, buildings, and I could have multiple buildings, office furniture, office equipment, vehicles, that sort of thing. I want to keep all of those separate. And all they're going to give me is one depreciation expense, but I'm going to make it a sub-account of depreciation expense so that I can keep it separate and still be able to summarize the depreciation in one number. Since I don't have that, I've got to create it. The account type is going to be an expense. Just come down to find expense, and we'll make it another business expense. We're going to make it a sub-account of depreciation, and they should have probably that's already set up, but we'll see. So, all right, so what did it tell me? Well, what it told me was that we don't have depreciation expense yet. It's not sitting out there. So, what I'm going to have to do is I'm going to cancel out of this one. And I'm going to go to my chart of accounts. So you see this is getting a little complicated in some instances. So I'm going to X out of this one. I'm going to go back over to transactions and down to chart of accounts. And I find it hard to believe that I don't have a depreciation expense, but anyway, because it should be there by default. Account name, depreciation expense. Oops. The account type is it's an expense, of course. All I'm doing here is I'm setting up a parent account. That's all I'm doing for this. Other business expenses, and it's not a sub account, but all of these other depreciation expenses are. So if I want to summarize depreciation, so if I know what my total depreciation should be, I won't have to just look at each one and add it up. I can make it a sub account, and when I do the summary transaction, I'll just get one number for depreciation expense. When I'm doing it in terms of I want to see what each one is in a detailed way, I can get the detail of each one. So I'm going to save that in the chart of accounts. Now I'm going to go back to new and a journal entry. Check my date. Depreciation expense. Vehicles. And I don't have it, so I have to create it. And so this puts us right back where we were before we had to cancel out of that because we didn't have the parent account. But all of this stuff, it kind of lets you know how flexible this program is. Just because I didn't have it in there doesn't mean I can't come back and create it. I can. This is going to be made a sub account now, and now I'll find depreciation expense that I just created right here, and it's a sub account of that. So save, and the amount of the depreciation was $1,300. I did set up for each one of these things an accumulated depreciation account. I already did that one for sure. So I'm going to type in the first few and accumulated. What happened here? Accumulated depreciation vehicles, 1,300, and we're done with that entry. So we save it. All right, the next one we're going to run into the same problem, I'm sure, but let's go back over to Exhibit 1, highlight this one, because we just did it. Record depreciation on the new truck. Assume it will have an 8.5 year remaining life, 90 months, salvage value of $13,000. Okay, so I'm going to come back over to Exhibit 2, and to get to the depreciation, I need, and I'm just going to use this one. Doesn't really matter. Now that's 60,000. The 60,000. Remember. Oh, you know what? I didn't make that change. Shoot. I changed it from 90,000 to 71.5, so I'm going to have to change it here. I'll change it on your Exhibit 1 as well. All right, let me go back over to Exhibit 1. Let's make a change over here. No, I did change it. I'm sorry. 8.5 years remaining life, so it's a 90 was the remaining life. I'm good. Sorry about that. Okay, and the salvage value was how much? 13,000. $13,000. Useful life is 90 months. $650 a month. Okay. All right. So 650. That's your depreciation expense and your accumulated depreciation amount. So back over to the journal entry. Depreciation expense. And this one we already set up the vehicle, so we should be good to go on that one. 650. And down here, accumulated depreciation. Vehicles, 650. We're done with that one. Yeah, you know, we're making so every just like I explained before, I change these scenarios every time I publish this practice set so that we're more topical with the months that we're working with. And so when I change that, I change numerous different things. So this is a little bit like making sausage. So, you know, there'll be mistakes that we'll have to correct along the way. All right, come over here, highlight this area because we've completed that transaction. Record depreciation on the building. Original cost 400,000, salvage value 62, remaining useful life 20 years. Back over here to this, 400,000, 32, 240. So I already did that. 1533.33. So, account depreciation expense. And this one we don't have yet, buildings. So we're going to add new, and we'll come over here. We'll handle it exactly the same way. The account type is an expense. Over here it's another business expense. We're going to save that. And go back and say 1533.33. And over here we're going to have the accumulated is set up because I set that one up. I assumed that all of the depreciation was already set up, but it wasn't. So it's accumulated depreciation building, same amount, 1533.33 credit. I look down here at the bottom and make sure my totals are equal. They are. Plus it won't let me go any further if they're not. Save and new. Back over to Exhibit 1. Oh, wait a minute. That's 62,000. Let me go back over here. Ah, not right. 62,000. 1408.33 is the actual depreciation. Okay, so I have to make a change. Oh, well, this is a good thing to do so that I can show you how to make these changes. Journal entry 25. Now it's not going to show it. I'm going to go back over here and I'm going to find my journal entries. How did you do that? Go to standard reports, all the way at the bottom or close to the bottom for my accountant and journal. So this shows you all of your journal entries. So I'll go all the way down to the last journal entry someplace here. Oh, it must be putting them in. Well, where's it at? You know, this thing doesn't update dynamically. It updates as on some sort of a batch basis, so it might not be recorded yet on the journal. I would have thought I would have seen it though. Well, I'm always surprised when everything doesn't update dynamically. You'd think it would, because but it's working out on the web. It's not a machine-based program. It's out there on the web. So sometimes it may not date or it may not update like it's supposed to. Let me look at today. Huh. So I guess it hasn't updated yet. Okay. Well, um, let's see what it did here on the standard reports. Let's look at the I could look at balance sheet detail, or I could look at the profit and loss, and that's where the depreciation would be as well. So I come down here to, yeah, see, it hasn't updated yet. So I can't do anything with it yet. That's okay. Once it updates, we'll go back and make the change. All you're going to do is just go back and edit that and change it from 1533.33 to 1408, whatever that is. All right, new journal entry. And you make a note to yourself that you're going to go back and fix that one. So I'm going to leave that one open. I'm going to say that it needs addressed yet, so I'm not going to do anything with it. Record depreciation on the office furniture. Okay. Let's see if that one's just the same. 2,500, 700. Go back to the Media Moguls. 2,500, 700, 24 months. So that one's good. I'm going to check this other one while I'm here. 10,400, 4 years. 10,400, 4 years. So these last two, these are okay. This one we had to make a change with because I changed it from 32 to 62 and didn't remember that I had done that, by the way. Okay. All right. And this was actually something that you were supposed to do, and I just did it for you. Back over to journal entries. My first journal entry is going to be depreciation expense. And this time it's to the office furniture. I have to add it. Same thing over here that I've been doing. Going to come down and find expenses again. Come over here, it's not advertising or promotional, no, it's just another business expense. Click on that. It's a sub-account. It's like the other one. It's a sub-account of depreciation. Expense. And save. By the way, all of this stuff, if you make a mistake on any of them or you omit something, it's not a big deal. You just go to look at the register, go back, and you can make these changes. You can make the change to the chart of accounts. Not a big deal. You can edit those anytime you want to. $75 is the amount. Accumulated depreciation. And long-term office furniture, $75. Save and new. Okay, we're going to do the same thing with the office equipment. I don't have it, so I have to add it. Depreciation expense office equipment, that's the account name. Sounds good. Come down and find expenses again. Over here, find other business expenses. And again, you can probably just start typing it. It'll give it to you. Sub-account, yes. The sub-account is depreciation expense. I might have forgot to do that on one, so I'll have to go back and edit that. And the debit in this case is 200. So now we're going to find the next one will be office depreciation, accumulated depreciation, and office equipment, 200, save and close. All right, let's go back over. That might have been our last journal entry that we needed to make. Those two have been handled. This one we still have to go back and fix. Okay, so I'm not going to highlight it yet because I have to go back and fix it. Okay, record the initial trial balance through the general journal entry and QuickBooks. Save the trial balance as a PDF only and load it up to Georgia View. Okay, well, let's go back over here to Media Moguls. And I need to X out of this. I'm basically done with this because this is asking me for something that that doesn't impact any of these entries. Okay, so go down to reports, standard report, and we want a balance sheet. The balance sheet is going to be 3-1, so I'm just going to change it to back to 3-1. So it shows up from 3-1 to 331 basically, or 329. That's today's date. And I'm going to run the report. Now, if I run the report, we're actually showing 751. So what happened, so you know, on March the 1st, remember what we did was, oh, I'm sorry, we hadn't done that yet. I was thinking that we did the new truck, but we didn't. So it's still at 90,000. And what threw me off with the 751,575, and again, the reason it is an 824,125 is because these accumulated depreciation numbers that we transferred in as well. So this is the number that you're looking for. Make sure it's that way on both. And then what I can do is I can print it. And when I print it, I can say I can print, email, or save as PDF, right? And so for your purposes, you want to save it as a PDF because you're going to load it up. And what I'm going to do is just all of this stuff, I'm just going to put it on my desktop. You can do whatever you want to with it, but if I put it on the desktop, create a new folder on the desktop, call it Media Moguls, or MMM, Spring of 2025. Then I'll have a place to put all of these reports that I'm going to later on send up. So I'm going to have to date this balance sheet, and this is just the convention that I use, but I'm going to put balance sheet 03/01/2025 with a lower space here so that it keep the dates separate from the balance sheet that I'm looking at, and save it. And then when I pull it, you can see that there I have it. And this is what I want you to submit when you submit this, so that I have all of this information like I should. Okay? All right, let's go back over here and see what some of the other requirements are. And so I've already done this one. Make transactions for the end. We did that. No reversing entries. You don't have to worry about reversing entries. Print the March 31st trial balance from QuickBooks to file. And do it the same way. Do it with a PDF again. And you know what you're going to do there is just going to go back and let's go to, you know what? This says initial trial balance. All right. So I got the initial balance sheet for you instead. This is a comedy of errors today, folks. I may have to redo this thing, but I don't really want to. Let's go back and do the trial balance. It won't hurt you to have the balance sheet as well. That'll be fine. So I'm going to cancel out of this thing. And when I go back to reports, standard reports, we did the balance sheet, but we can come down here and we can do a trial balance. Here it is over here. See it? This is under for my accountant. Come down here to trial balance. And with the trial balance, we have to redo these dates. Because we want the beginning trial balance. Run report. And here you are. Here's your 824-125. And this should have all of the amounts in it. Notice that it didn't pick up any of the accounts that weren't, didn't have anything in them. And there's your 824-125. And again, what I noticed is that a lot of people did the accounts receivable wrong. They didn't have 8,000 up here. They had 8,000 minus the account payable, which this 575. So they didn't have anything for accounts payable. But you cannot offset those two. All right, here, go up here to your print button, print, and save as PDF. And this is the trial balance. Going to do it the same way. 0301-2025. So now you know how to do both. All right. I'm saving it to the same place. And when I look at it, there's the PDF. The PDF, what it does is instead of having all of these entries strewn all over the place because it won't keep them in good form, what it does is it puts them in the right form so that I can look at it and say, yeah, cash is 35,625, so they're correct. Okay? But it won't hurt you to upload them both. It's no big deal. I'm going to close that one. Go back over and see what is next. Print the 31 trial balance, March 31 trial balance. So did we do that? I don't think so. So again, I'm going to go to reports, standard reports. Notice this thing's got a pile of different reports. You can create your own reports too. And that's why I said when you have your own business, you want to put as much stuff in your in the fields that they provide for you as possible, so that if you want to know how much so and so, like say Weatherly Surprise or something like that you bought from them, it'll be able to tell you that as well. Be able to give you that summary as well. So it's just a good thing to do. Now it does take some time to do it, but that's okay. We're going to call this March 31st and make sure it's March 31st on both sides. Run the report. Then we come down to the bottom. That is your trial balance. Notice that it's going to be different than your balance sheet because your balance sheet doesn't take into consideration that this is a credit. It just automatically offsets the credit that you have for accumulated depreciation with the asset. And that's why those numbers are different on the balance sheet and trial balance. This one puts them, if they're a credit, they show up as a credit. If it's a debit, it shows up as a debit. And therefore, those numbers are always going to be a little bit different. And I'm going to come over here now and click on this, save it as PDF. Since I already set up this on my desktop, trial balance and then this time I've got to put it in as 03/31/2025 and save it. And when I'm always just going to check to make sure that I have it like I should, and I do. All right, X out of that one. Go back over to Exhibit 1. Highlight that one, get it out of the way. Print the income statement and balance sheet to file for the month of March 2025 and March 31st, respectively. Now, why we're saying that is because the income statement is a motion picture, okay? And the balance sheet is not. The balance sheet is for one day only, March 31st. Okay. Now remember, we still have this little entry for depreciation that's going to throw all of this stuff on mine out. But when you do yours correctly by putting the 1408 in for depreciation on the whatever was the building, I guess, you shouldn't have this. You shouldn't have this problem. It'll be a little bit different that I'm going to show you right here. Okay, reports, standard reports. So they wanted the income statement. That's called the profit and loss. Okay, they're using this archaic terminology from way back when, 30, 40 years ago. And why they're doing that, I don't know. Remember that when you change these dates, you have to run the report. And when I come down here, I want to make sure that all of this other stuff is in here correctly. Depreciation expense. This is the one I'm talking about, right? So this is the transaction report. And what you have to be able to do is you have to be able to edit this number. And I think maybe we can do it right here, but I'll just check and see. Yeah, this gives me a chance here to edit this. 1408. Let's go back and see what it was. 1408.33. 33. 1408.33. And save it. So now let's see if it updated dynamically, because sometimes it does, sometimes it doesn't. You just got to figure out which ones are working in your favor. Okay. All right, so let's see here. Reports, standard reports. And now do profit and loss. And so I want the period. You got to change your period from the 29th to the 31st, because our last entry was on the 31st. Run the report. Come on down here. Let's look and see if it changed it, and it did. And so we have a new net income number. Do the same thing here. I'm going to run the report. And then I'm going to come up and I'm going to save it by printing it. Okay. Save as PDF. Profit and loss. 03/01/2025, and then underscore again 03/31/2025. That tells me that that profit and loss is run from the period of the 1st of March through the 31st of March, and save. Now, if you don't have the right dates in, you won't have the right, and you have to make sure you've changed that from 1533.33 to 1408.33 or whatever it is. I'm going to look at it again to make sure that that change was made, and there it is, 1408.33. Okay, so this should be exactly the correct amount. $6,790 is what you should be showing for net income. If you don't, we got to fix that before you go any further, because net income is cumulative. Okay, and if you don't fix it, you'll wind up with a problem down the road. All right, what else do they want? Highlight this one, and then prepare a brief summary of the transactions for the owner, which will include the percentage of net income or loss to sales and the current ratio. Well, I'm going to show you this the first time. Okay, with the first one, here's what they're looking for. This number of net income divided by total sales. Okay, so we're going to be 6,790 over 16,075 dollars. That'll give you the first one. Okay, now let's go back to reports again, because I want to change the report that I had for the trial balance before I made the correction. Okay, to the made the correction to the depreciation. So this trial balance report that I wanted was 331, and now run the report. And when I run the report, when I come down here, I should see under accumulated depreciation, that, then I come down here, I'm going to see 1408.33. That's the number I was looking for. Note that when you do yours, if it still says 1533, just click on this, go back and click on the number 1408 or 1533.33, and it'll allow you to change it to 1408 and just run it again. Okay, and so in this case, I'm just going to create the PDF, save as PDF. And what that is the trial balance right here. And save it. It's going to say that it already exists. Do I want to replace it? Yes. Okay, and then anything else that you did, if you had the 1533 in it, you need to go back and change it. So just look at your PDFs, and if your balance sheet doesn't show that, then you just change it right there, and you can. It's not a problem to change it. Like I said, you're just going to go over to find it. When you point to the now this is the PDF, can't do it on that. But if you do it on this is the actual trial balance. Just come down here, when you point to the number, it gives you an opportunity to change it. To change it to back to where it needs to be. If that says 1433.33, it should say 1408.33. Click on the number, go back, adjust the journal entry, and or edit the journal entry, and then you should be okay. So this is the number you're looking for, and this is as of March 31st, the trial balance. Okay. The last thing they want you to do is they want you to do a current ratio. Well, you only have 3 items here: cash, accounts receivable, short-term marketable securities that are current. You want to add these 3 up. You want to go down to the current liabilities. Now there's a few more there, right? So go back up to current Joey Johnson and then go all the way up to accounts payable. Add those up, put one over the other, current assets over current liabilities, and it gives you a ratio. It is shown as something colon 1, so it'll always be like 2.50 to 1 or whatever. In this case, I don't have that number, but you know, you can just, like I say, just add these 3 up. That'll give you a number. That's your numerator. Come down here to accounts payable, add these up, all the current ones up. That's your denominator. Divide one by the other, and that gives you a number. And that number will be stated as whatever it is, colon 1. Okay? All right. Took us a little bit longer than I had hoped. This is about an hour and 10 minutes, but if you subtract out the errors, the missteps that I made, you probably back to about an hour. So before you do anything, just make sure, if I'm fumbling around, make sure that you recognize that and make the change. And if you put in the 1408 correctly the first time, you won't have to worry about having to go back and change it. But it's like I say, it's a good exercise because it gives you an opportunity to make the change on that journal. Now, when I first looked at them, noticed that they weren't even there, and now when I come back and look, now they're there because they updated. It just takes them a while sometimes to update, so don't panic if it's not updated immediately. Sometimes it takes 5-10 minutes to do. Okay? All right, well, that's the end of that one.